Despite a potential resolution of the ongoing tariff conflict between Washington and Ottawa, economists warn that uncertainty surrounding the U.S. Mexico-Canada Trade Treaty, or USMCA, is likely to persist and hamper growth in the coming quarters. The treaty, which replaced NAFTA in 2018, is set for review by the White House next year, potentially leading to new demands from the U.S. on Canada. This ongoing uncertainty will keep corporate executives and households on edge until the future of USMCA is settled. Currently, about 80% of Canadian imports enter America tariff-free, thanks to USMCA's regional content rules. However, should negotiations fail to extend USMCA, Canadian exporters face potential risks. As Avery Schenfeld, chief economist at CIBC Capital Markets, puts it, Canadian exporters are at risk if subsequent negotiations fail to extend USMCA, and that uncertainty will leave a cloud over capital spending in Canada in upcoming quarters. The US, Mexico, and Canada agreed to a formal review of the treaty in 2026. As the prospects for a deal between Trump and Prime Minister Mark Carney have dimmed recently, with Trump stating that trade talks with Canada are not proceeding well and Carney expressing a reluctance to rush into a deal at any cost, economists are growing increasingly concerned. Given that 1/5 of Canada's GDP is tied to trade with the US, a resolution to this tariff conflict is critical for the Canadian economy. A deal providing some tariff relief, such as on autos, as Japan and the EU recently secured, would support growth in the near term, according to Charles Stiarno, chief economist at Alberta Central. However, Stiarno warns that permanent damage has been done, with some projects likely permanently cancelled and exporters deploying more of their capital in the US. Ultimately, an August 1st deal may only provide a temporary solution, as the US will likely set its sights on reviewing USMCA next year. As Stiarno puts it, I think we should already start thinking about where the US wants to take USMCA. In the meantime, the Bank of Canada is expected to keep its benchmark interest rate unchanged on Wednesday, despite elevated inflation and pockets of strength in the labor market. However, Governor Tiff Macklem has warned of weaker growth without a resolution to the tariff dispute, with economic data in Canada showing mixed results but no sharp deterioration. The International Monetary Fund forecasts 1.4% growth for Canada this year and 1.6% in 2026.